What's up, everyone? It's Dustin Hodges, aka DJ01. I wanted to talk a little bit today about some investments that I made recently. So I'm not a professional trader. This is not advice. It's just me thinking out loud about how to invest smarter. And I wanted to share some of that with you. I'm sharing my personal strategy and what's been working and not working for me so far, hoping to really spark a conversation so that we can all learn from each other. So I'm intentionally keeping things low stakes, and this is more about pattern spotting and discipline rather than gambling, but my approach is really simple. If a stock's around $200, I'll usually grab 1 to 2 shares. I don't have a lot of money right now. I set aside under $1,000 for a budget recently, and this is kind of how I've spent that. So if it's in the $10 to $20 range as a stock, I might buy anywhere from 10 to 50 shares. So far, I'm seeing one position up nearly 100% over the past few months, and a few others averaging around 10% gains just in the last couple of weeks. So it's been a worthwhile experiment. I also want to preface this by saying you may not even have $1,000. I didn't at first either. Start where you're at. You may have $100. There are stocks in the $10 to $20 range that you can really start to build a position with. So the first stock that I wanted to talk about, this one's really a no-brainer right now. You're going to see a theme around AI, as some of the conversations I have tend to theme around that anyway. But this is AMD, with OpenAI's committing $6 billion towards AMD GPUs. It's clear the AI compute race isn't slowing down anytime soon. Everyone keeps saying that compute is the new oil. And honestly, they're not wrong. It's just whoever can supply the fuel for the AI boom is always going to be sitting on something big, at least for the foreseeable future. AMD isn't chasing NVIDIA either. They're carving out their own line, but positioning themselves as the second major source for large-scale AI hardware. So I think this is a really important position for them to take as a company, just with my experience in technology, that call it where you're at, right? If you're not the leader in your space, then take the position and find the value in that position that there's still a huge market share for. For me, it's a long-term infrastructure play, right? I don't expect overnight gains, but I do expect continued growth as AI becomes embedded into everything. The second one is C3 AI. C3 is interesting because it's not just another buzzword company. They're building agentic AI platforms that help big companies actually use AI, not just talk about how they bought AI. What stands out for me is their focus on enterprise adoption and real outcomes. So they're not just chasing seat licenses, they're actually chasing usage value, and they're measuring that, which is really valuable to their customers. I think they've actually kind of got a handle in the federal department in some way, but I could be wrong on that. It's early. I haven't had a lot of coffee. And that reminds me, how successful software companies really grow, right? They're not just selling subscriptions anymore. That was 10 years ago. Right now, you're trying to provide your worth inside the business and see adoption and growth. And I think companies tend to talk about that, but it's really the ones who show up with a customer success strategy that will make the difference and turn ROI for their customers. Duos Technology is my third pick, and this one's been a dark horse and my best performer so far. It's up 100% in the past few months. They're building AI-powered railcar inspection systems that can analyze trains in real time using 360-degree imaging and defect detection and all sorts of cool technology. It sounds really niche, but it's actually huge when you think about infrastructure modernization and logistics automation in the US. This is something the U.S. keeps investing in smarter transportation, better rail systems. Companies like Duos are in a great position to really capitalize on that. This is one of those less sexy but deeply practical AI plays that could quietly keep winning. Number 4 for me is SoFi or SoFi. I think social finance, so SoFi, I believe. They're a bit more controversial, but I've had a gut feeling about this one for a while. They built a FinTech ecosystem aimed, I think, really the way I see it, at younger investors who are tired of traditional banking experiences, or are wary of institutional level kind of traditional banking systems. between student loan financing, mortgages, investing, full service banking. They really feel like a modern hybrid between a bank and a tech company, and I think a lot of people will be attracted to that. I also used to work near their offices in San Francisco, and I met some of the folks there, and genuinely they believe in what they're building, and I do too. It kind of always stuck with me how they talked about it. So, younger generations want more clarity, they want more control, they really want transparency, and that's the gap they're really trying to fill. So these are my 4 bets for now. They're small, they're intentional, they're not get rich quick moves, but they are steady learning plays for me. My focus is simple: build confidence, learn market behavior, and stack small wins that compound over time. If you're trading or watching something interesting in the AI or tech space, drop it in the comments. I'd love to hear what you're seeing and what your thoughts are. And let me know if this kind of breakdown helps you think differently about investing, or challenge any of my decisions. I'd love to learn more, and I'm very, very open to discussion. So anyway, that's it. It's October 10th, I believe. It's October 8th, and this is my quick breakdown. It's October 8th, 2025, and this is my quick breakdown. Thanks for watching.